Hi, welcome to the Money Effect, where I bring you all the news related to money and finance topics. Just a disclaimer, this is not financial advice and strictly for educational purposes and just my opinion. Hit like and subscribe for the YouTube algo and continued content. Now that's out the way. Let's go. So, if you've been following my topics or new to my channel, one thing I've been discussing, especially going into 2022, is inflation. We've seen, inflation is high in terms of what the price of goods are. It's going up, and we've got central bankers around the world saying, it's just supply issues. It's not nothing to do with demand. These central bankers, they've got PhDs, they're at the highest level of intellect possible. So surely we should be following what they're saying. They're saying it's only supply issues. Next year will get better. So if that's true and you believe that, then one company we should look at is Amazon. Now, Amazon is a big multinational company, and I'm pretty sure everybody knows what Amazon and they've used it in some form of aspect. You could look here at the description, Amazon. So it's engaged in the retail sales of consumer products and subscriptions in North America and internationally. The company operates in three segments: North America, International, and AWS, Amazon Web Services. But in brief, Amazon is basically a big e-commerce platform company where you can buy and sell goods. It has departments to do advertising. It also has cloud computing, which is about, data storage. But the reason it's called cloud is because theoretically it's in the cloud, it's in the air. It's not physically supposed to be data storage, but I won't get too into that. But it's a big part of their business, AWS, and also artificial intelligence. And what I mean by artificial intelligence, if you've seen the film I, Robot by Will Smith, and you believe that robots are going to take over the world one day, well, that's something Amazon is that's the feat something that Amazon concentrates on, and it's similar to the point where if you believe in 10, 20 years you're going to be able to buy a robot and program him and say, you know, I like mac and cheese. That's my favorite dinner. It's made in a certain different way. I like some jerk chicken, rice, whatever, fried rice, jollof, whatever. Program it, and that robot, sorry, not he, she, that robot should be able to, you know, make your dinner for you. And if you believe that's the way the world is going, then Amazon are definitely a leader in that industry. Obviously, they use artificial intelligence in the sense of, for their warehouses to, process efficiency more quickly. But yeah, what's the latest on this company? So, I like to, research and see what's going on, what's the talk around this company. These are journal researchers, but it gives you a good idea of what's going on, what's moving the share price right now. And as you can see, Amazon is popped. It's popped because of two reasons. One of the reasons is, it's been made a top pick by Goldman Sachs, which we'll discuss in a second, and obviously it's partnered with Starbucks. So as you can see right now, a lot of good chatter around Amazon. That's why it's up 3.7%. And you know, you've got people now, normal journalists just covering it, giving you kind of a rough summary of what's going on. If you, especially as a retail investor, we don't have access. Well, I will explain later. We potentially don't have access to full analyst research reports. So we look here. What are the gurus saying? So Goldman Sachs, obviously, is a top investment bank in America, brightest of the brightest again, uh, clever people, and they've basically made Amazon a multinational quality company, not any unknown company like these. Alibaba we know is depressed right now, same kind of field. Let's get in Alibaba because Amazon is so high. Let's get in Alibaba. Why? Yeah, Alibaba will probably go down, or let's find the new e-commerce giant. Why? That's not proven. Amazon is proven quality company, and the cleverest people at Goldman Sachs are making this their top pick. So that just says everything about, maybe investment is not as hard as one might make it to be, because everybody's heard of Amazon. So and these people, everything we've all heard of this company, and these people that are the best of the best. They're not picking some obscure company you've never heard of. They're picking Amazon as their top pick. So when we trying to get into retail investing and trying to understand more, it's there right there. That it might not be as hard as they make it seem to be, especially if you're looking at these big companies. But we'll just get into it. And what they're basically saying is they're saying that Amazon has trailed the mega cap technological peers this year. Obviously, if you look at the performance of Google, um, Apple, Microsoft, I guess Facebook has had a blip with the whole insider dealing, but definitely they've all kind of outperformed Amazon this year. And one of the reasons why they're saying it's going to outperform is because they're saying it only gained 10% in 2021, which is still a good return, but it was grappling with the reopening of the economy. Obviously, as we was in lockdown, a lot of shops were closed. Maybe people just didn't want to go out. Supermarkets were open, but potentially supermarkets are not always the best place if you want to buy, like electronic goods. So Amazon was just open, great, and obviously they're so efficient to bring you stuff. If you saw, like, they're always looking for Amazon delivery drivers. It's flexible working. If you're looking for a little side time hustle, I suggest you go and do an application, because they're always looking for drivers. It's so big. So obviously now that the economy is reopening, we've got these vaccines and treatments. Obviously, that's kind of weighed on Amazon's share price. And then obviously the other two things are rising labor costs and supply chain disruptions. Now the economy is going to keep on reopening, so we're going to have to deal with that in 2022. Well, I will get to that at the end, actually, because potentially we're having some issues now. But rising labor costs and supply chain disruptions, as more people come back to the workforce, people that have been ill with COVID, staying at home now that furloughs ended, people have got to go and get jobs. Not to say that they were lazy before, but obviously now that government support is gone, and obviously supply chain disruptions, more suppliers are coming online to get the products, the goods and services. That's going to ease on Amazon, and when that eases on Amazon, obviously that's going to help its share price. That's in a nutshell why this big investment bank is saying that Amazon is going to be one of its top picks next year, because the main two things that have been weighing on its performance, although it still returned 10%, is those two issues. And obviously, like you can see, they missed a couple of their estimates. So that's another thing that's weighed on their performance. Now, another thing I like to do, I like to see what the analysts are saying. Now, unfortunately or fortunately, these analysts, they produce like research reports. So these individuals, there's about 30 of them at the moment under this, probably a lot more, but Tip Ranks has 30 of them covering this stock. They produce mass research reports. Obviously, that's their day job. That's their thing to do. It's probably something you cannot do. And then Tip Ranks will kind of summarize it to get profit. Look at the kind of levels of what's the target prices. Obviously, they're all ranging from different. This person saying 33875, only 4%, 0.8% upside. This one is saying 4150, 12.28%, and obviously they've got ratings. Now, when you get into investment, these are the kind of things. It's going to make your job easier, because you cannot, you can't. You're not going to be able to produce research reports. These research reports, these people are covering these companies, they're meeting with these companies, they've got access to management, they're doing models on them. This is their day job. They've gone to, more than likely, most of them have gone to university, very clever people. So potentially it's not something you can do. But what you can do is you've got services like Tip Ranks. It's basically just going to summarize everything they've done, and then you can easily make your decision from that. But you don't want to get into a position till you're ready. If this might cost you £500 a year. Now, if you're somebody that's got capital of 10, 20,000 to invest, and yeah, sure, that's nice. This is just a cost for you. But if you've got £1,000, and you can start with any investment amount, I'll do a video of some of the places where you can potentially invest. You can start with any kind of investment amount from £100 or whatever. You do not want to be spending £500 if you're starting from £100, £1,000. That's you're going to be negative, or that's half of your capital gone. But you can see what these guys are saying. There's, you've got 30 people. They've estimated 30 people coming in this stock. Everyone's saying it's a buy. Nobody's holding and nobody's selling. Now, the Federal Reserve, they've got PhDs. We think they're clever people. these people, Goldman Sachs, best investment bank in the world, is picking a company we all know about. 30 analysts, probably out of them 30 analysts, I'll guarantee at least 25 of them have gone to university and got degrees in some form of capacity. Clever people. Could they all be wrong? Absolutely. That's why you need to do your own research. But if 30 people are saying it, then unless something disastrous happens to this company, they're going to be right in some kind of capacity. So it's a good kind of way to just have a feel of what the analysts are saying. And right now, they're all saying that this company's got upside target. So we can also look at this now. There's another platform, Simple Wall Street. Now, one thing that these analysts do, they will look at the share price. This is the current share price, and then they'll calculate a fair value. Obviously, these analysts, like I said, very clever people. They've got access to, and not only they're clever people, they've got access to data, financial models, where they might just be inputting numbers, but they need to know how the models work. And you might not even know what a financial model is. So already now you're your head scratching. And I'm not saying you need to know what a financial model is, but you have these kind of platforms like Simple Wall Street. You can get a trial that's basically going to calculate this value for you and give you a feel of the kind of stock price. And it's looking there, share price is this, and its fair value is this. So it's undervalued at the moment. But what you're going to say what's fair value? And fair value is basically coming up with the value of the company. Like, what is the company worth today, all things considered, not what the share price is. And there's different ways to calculate the fair value, but the best way that most people use and most analysts use is the discounted cash flow. And if we can read it here now, it says the discounted cash flow is a valuation method used to estimate the value of an investment based on its expected future cash flows. DCF analysis attempts to figure out the value of an investment today based on projections of how much money it will generate in the future. This applies to the decisions of investors in companies or securities, such as acquiring a company or buying a stock, and for business owners and managers looking to make capital budgeting or operating expenditure decisions. So basically, in a nutshell, the discounted cash flow is going to say, well, Amazon is expecting to earn this much next year. Based on that, how much is it worth today? Obviously, that will calculate a fair value. Now, Amazon might not earn that much next year, and hence this figure might be wrong. But it gives you a good guidance that we've looked at the cash flows. They do some complex calculations. We've looked at the cash flows, and we think, Amazon, its fair value is worth this, but yet it's at this. So this is already now showing me that this is potentially a good stock to buy, to look around, to do more research in. Now, let's look at the share price before we finish up. So let's just have a look at what's been going on with Amazon. So like I said, they said it's gone up 10% this year, and you can see, it hasn't, compared to, like, say, a Google or Facebook or Microsoft or whatever, it has lagged, and it's had big dips. And the one thing about these big companies is, like I said, people look for these stocks never go up in a straight line. It would be nice if the stock just went ooh, but it doesn't happen like that. But what you see is, over time, good quality companies will go up like that. But if you're looking in shorter time frames, at the moment it's good. But if you're looking, say, for here, for example, you bought here, it goes down, you think, oh shit, company shit, sell, it's gone back up. So it is important to somewhat time it. But in the essence, even if you did buy here, look, we're literally back at the high point today. So if you'd have held it for 6 months, you're here now and you're good to go with some upside potential. So, or you could have been averaging down, again, another method which I'll talk about. But in essence, you can see that, if we look at 5 years and we look around, this was when Corona was, and it didn't even dip. It's literally where you see other companies went whoo on March the 20th. This actually went up. So you can see it benefited a lot from lockdown, and then since then it's not obviously as drastic, but it's still going up, still a big company. So like I said, from the start of this year, it hasn't performed as great as other companies, but it's definitely a performer. And if you believe, that supply chain issues, there's a lot of other metrics here that they do mean stuff. And as you watch the channel, I'll explain these a bit more. But in essence, I think as keeping it as simple as possible, you're looking for the fair value. Simple Wall Street will help you. And you don't even need to, you could literally, because when you watch other YouTubers, if you find a stock, they're all gonna have, they might even show you the fair value in their screenshot, so you could just work it out that way without even having to get subscriptions. But obviously, once you get to the level of, you have a lot of money and this is something you're really passionate about, you're potentially going to want to get subscriptions. So definitely looking at the share price, definitely on the up. Now, what would you buy today? Hmm. Now, if you're for the long term, maybe in a year's time, yeah, because it's going to go up, but it might go down, and then you'd have to dollar cost average, or you could just set up alerts right now, see if it hits your alerts, if something happens. That's what I would suggest doing. One thing I can also see here now, we did talk about lockdown. Austria has reimposed a full COVID lockdown and making vaccines mandatory. So if you're in the, and I'm talking about supply chain issues, but if you're in the camp that lockdowns are not over, if that's your belief, then again, this is another good play for you to get involved in. So yeah, that's just wanted to just give you some news about Amazon. And yeah, if you like the video, hit like, subscribe to the Money Effect. Thank you.